morning, all. Ira Epstein, and here we are on a snowy weekend. If you're in Chicago, it's unbelievable. I can't imagine poor people trying to travel. It's really terrible. But in any case, we are on November 30th, Sunday, 2025. And as you can see, come Monday morning, we're going to get the S&P final U.S. manufacturing PMI. We're going to get the ISM data at 9 o'clock, and at 8 at night, Fed Chair Powell speaks. I don't know where, because it's generally the closeout period now, where before the Fed meeting, nothing really gets said. So we'll see what that's all about. In terms of chart action, if we take a look at gold on a monthly basis, up another for the month, remember this last day, 6%, finishing out at a high of 42.1830 on a closing basis. That's really very impressive. As we look at a weekly chart, we haven't gone up for these highs, but the market has come back, and you had a very strong week. We had the big rollover where most traders were coming out of their December gold, going into the Fed gold, unless they wanted to stand and possibly take delivery, and that's always a possibility. When we take a look at the swing line, the pattern is one of higher lows. And if you look at the high here, 42.28.27, you didn't quite get that. So you have lower high, higher low. So if the market takes out 42.28.70, what takes place is then the market's back into the pattern of higher lows and higher highs. The support in the market is all the way back at 37.89.40. If you look at the 18-week moving average of closes, I don't think that's where we're going back to at this point. So I am not looking for that to take place. Rather, I'll look for resistance up here at the 43.87 level, which is the Bollinger Band, and that's the number that I think you've got to pay attention to. In the slow stochastics, we'll take a look. The market is overbought. So could I recommend on a weekly chart that you just jump in and buy because you're going to go up for a new high? It's very difficult. The market is overbought, not embedded. I don't recommend doing that. In the gold-silver ratio, you can see it continues to come down. And as it does stuff and goes lower, really the fact is that the silver market's gaining on the gold to a degree there. When we come over to the silver on a weekly chart, you can see you're over the upper Bollinger Band, running to the upside. So this market has gotten the bid over the gold market. And when you come to the copper, it too has come alive. And I would expect that that's going to continue a bit here. I keep mentioning, and I won't stop mentioning it, the copper supplies in the first part of 2026 are limited due to some mining issues that have taken place. They've been well telegraphed, and the market, each time it comes down on a weekly basis, can't even make it to the 18-week close. On the other hand, it is an overbought market. In the platinum market, we've had, in fact, let's get rid of this right here. We don't need that any longer. You've got a pattern of a higher high and a lower low. The market is definitively in an area where momentum is turned up. You're not yet overbought. You will be probably when you reopen on Sunday night, so pay attention to that. And in the dollar index, well, you can see the market keeps hitting the upper Bollinger Band. It is still strong. To get an idea that the dollar wants to break, you probably got to take out 98.86 and a half. It's not that far away. It's all of 50 points away or so. But if that were to occur, that could also ultimately be bullish for the metals, because the lower the dollar goes, generally speaking, it makes metals cheaper to buy in another currency. So that's the way that I'm looking at the market. The holidays are behind us. We'll get back to normal action. I, of course, have the sale for you, and let's talk about that, because this is Cyber Week as far as I'm concerned. And in our Cyber Week, it's simple. 1/3 off. So let's assume you want to try 1 month. 1/3 less than the normal price of $32.50 for the futures video. 1/3 off on the Spider ETF. If you want 3 months worth of the video, 1/3 off. 1/3 off if you want the Spider ETF and the combo packages. These are great deals, something you should look at. But we're also going to let you look at the courses and so on. So my complete futures research, which includes 3 months of my twice daily written updates and everything else that I do, well, that goes down from 180 to 120. And that's for a funded trading account. Without it, it's $400 instead of $600. And in addition, let's assume you want to take my charting courses. 1/3 off any of the charting courses. This will last until December 6th. All you need to do is go to iraepstein.com. That's iraepstein.com. You can look up at the top at the videos and follow our cursors up here. And if you're watching this on YouTube, it'll be over here. And away you go with it. It's that simple. I'm Ira. You have yourself a great weekend. I will catch up with everyone Monday morning.